With 17 years of trading experience and being the #1 algorithmic trader.
In my opinion, AI is a revolution, especially in trading, but we will need in some sort of way to implement some measures of control on what the AI is doing, because I've learned in a hard way that robots and AI need some kind of control, especially in the financial markets. They cannot go on their own.
Introducing César Barriga, the #1 algorithmic trader in 2010 and 2013, and now transitioning from algorithmic trading to manual trading with his family office, wealth management, and personal assets.
Most brokers, what they do nowadays is they get an STP license, like an AIgo license, and they STP to an offshore entity, which is B-booking, and they are the same owners. They market themselves as, no, we're fair, we're transparent, blah, 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 and they're B-booking those trades. So it's how it works. Euro Swiss franc was pegged at 120, so the Swiss National Bank was defending 120. Every trader was really excited because I buy at 120, it rebounds, and I sell at 121. It's easy money. In January, Swiss National Bank removed the peg. Euro Swiss franc moved from 120 to 0.8. One specific broker that day made like 14 million USD in seconds.
In the journey that you've had, you've seen the misaligned incentives, the brokerage B-booking. They rely on the downfall of the trader to profit. Simulated prop firms are essentially a B-book model, relying on people to fail the evaluations and then minimal payouts, and that differential is their profit margin. Do you see any concerns there?
That's a really good question. I believe that.
Ladies and gents, welcome back to another episode. I'm joined by César Barriga. Hope
Yes.
I said that good.
You did.
So we have a very interesting man in front of us today. He is the #1 in 2010 and 2013 algorithmic trader in FXCM, a huge brokerage that I'm sure most people know about. But your journey is a little bit more than that, and going beyond algorithmic trading and the way you're trading now, your history with the brokerages and real prop firms, I want to call it, 15 years ago. So we've got a lot of things to unpack today, but I want to start off with, when I hear algorithmic trading, and maybe it's not the way you're doing it right now, but I just think right now, maybe with AI and everything that's going on with the world, technological advancements, what would you say is the future of trading when you link it into algorithmic trading, AI, machine learning, these kind of things?
Okay, well, first of all, thank you, Waqar, for the opportunity and having me here. In my opinion, I mean, AI it's a revolution, you know, especially in trading. But this question came to my mind a few weeks back, and it was they mentioned it in a podcast too, and my answer was very simple: as long as we don't let the AI control like everything, we will need in some sort of way to have to implement some measures of control on what the AI is doing. And I have a lot of stories about this, because I've learned in a hard way that robots and AI need some kind of control, especially in the financial markets. They cannot go on their own. This is
What do you mean you learn some hard ways?
Yeah. Yes, I have some stories that I've been telling. Okay, so very briefly, I had one trading algorithm. It was trading the yen overnight, and to put it simply, I was expecting the robot to enter the market with two MetaTrader lots, which is 200K nominal value, and when I woke up, it sent 200 lots.
Oh.
Yeah. So one of my first mistakes was arriving at the desk in the morning and not cutting my loss at that situation. So that was mainly because I programmed everything correctly, but there was some kind of bug in the code, and it multiplied the volume, right? So this led me to a situation where I was in pain for like a week, because I was watching my loss. I was paralyzed. I was frozen with my fear of losing more. Mm-hmm. And I was very lucky, to be honest, because I was losing 200K in the beginning, and after 4 days exactly, my worst loss was like minus 100K, which in terms of percentage, it wasn't that bad for the portfolio I was managing. But it was a shock, because it was my mistake, let's say. Mm-hmm. So this is why I always say that I learned the hard way. And I was able, there was like an FOMC speech, and I was able to be able to hold the position It came back to minus 200K, and I cut the loss at minus 200K. But this is what I mean by AI needs some kind of control, you know?
Okay,
We have to oversee what they are doing.
So before we get into the specifics, I want to understand more overarching, because when I briefly learned about algorithmic trading, there's a few, let's say, models and on certain are risk, like we mentioned off camera, like there's martingale and other risk parameters. But then there's also trend related. There's maybe reversion back to the mean, or maybe there's high frequency trading. So these are the things that have come up when I learned, but I imagine you're doing things a lot deeper. So at the time when you were on the leaderboard, and well, it's funny you mentioned you didn't even know you were on the leaderboard, but what kind of approaches were you using?
Okay, at that time I wasn't aware of the risk I was taking, but we were a group of traders, and we were using some sort of, it was a kind of a martingale, but there was not a multiplier in the martingale. So basically it was what we call a grid trading, which is basically adding to losing positions, adding with the same volume in each order. So we had this algorithm that was able to calculate risk depending on the number of orders that you implemented. And we were lucky because we had like 3 fantastic years in terms of performance, simply because the markets were in a 200 pip range. So we already knew that 80% of the time markets are ranging and 20% are trending. Well, it's not exactly that percentage, but you know what I mean. It's more of a ranging market, especially in currencies. Okay, maybe other assets, for example, stocks, is not the case. But currencies, we say that they are pendular, so they move in big ranges. So, for example, euro-dollar can move from parity to 160. Okay, so it's a lot of pips, but at some point during some time, they will range in tighter ranges. So at that time we didn't know exactly what we were doing. We just thought, we back tested the idea, and it was running like perfectly for a few years, and we said, this is interesting. We can apply different grids in different pairs depending on the back test we were making, and we can be successful at this. And definitely we were for 3 years. So we were basically just trading ranges, and it was very simple, but it was algorithmic because we were trying to capture like small movements with different orders and adding like small profits to make it in the end a big performance.
Was the algorithmic part the actual analysis and decision making, or the execution as well?
It was both.
Okay.
They were programmed. For example, we had Asian session algorithms, which only traded different ranges. They started buying and selling at the same time. So it was different pairs, different sessions, different hours. It was basically all programmed to work. So we back tested every single pair in different times, different time zones, different sessions. And it was a very hard work because we were basically, most of the time we were back testing and seeing exactly what range and what pair we should use for different approaches.
So now looking back at that analysis you did and the backtesting you did, I'm a big believer in trading and time of day and the more probable times to execute a trade. What is your thoughts on time and taking trades?
That's a very good question. I do believe that, for example, overlapping sessions where there is more volume, this is exactly what we teach our students in our academy, is key to success, because the most volume you have is in the overlap of the Asian session and the opening of the European session. So that is exactly where there are more, let's say, opportunities in terms of liquidity, especially, and in terms of ranges. And it's basically Asian session traders are closing their positions, European are opening, and you can see like volatility, and you can see exactly where you can enter the market. So I do believe that it's very important to choose different overlapping sessions So for example, European session and US session at the same time are the most important, in my opinion. It's also it also depends on the data coming out that day, so macros. And I do believe that you have to take in mind like everything. So I do believe it's a very important part to be able to decide exactly where you trade.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. So I want to rewind to the day you mentioned that you found out you were in Europe the largest FXCM trader in terms of deposit and returns. You can explain exactly what happened there and how you were not aware.
Okay, so it was a funny one. I traveled to the headquarters in FXCM. I was invited and I didn't know exactly why. They just wanted to meet up and apparently we were there and they told us, okay, so you're here because we want to tell you that you're the best trader and the biggest in Europe at this time in currencies. And we were like, okay, wow, fantastic. So they invited us to dinner. We spent some days with them. And this was the first time we didn't know exactly what was going on. So we were able to, we started off first off raising and trading our funds. And then it was family and friends opening accounts. And what we did was create a PAM account or a multi-asset manager. And we traded from there. So it was interesting. We weren't expecting, to get this credit, and they were like, yeah, you're the best in fundraising, let's say, which was absolutely, we didn't expect that, and in terms of returns too. So we were able to deliver big returns those years.
Now looking back at that time of your life, it seems you've moved away from it in terms of trading approach and probably a lot of other things in between. How do you look back on those days and how you were as a trader?
That's a good question. So I always say that trading is it's a big learning process. You have to go through a lot of stages, and when you think there is no like peak in learning, So at that time I was trying to backtest my ideas, and hopefully they were right, which is not like normal, because normally you get to crash and lose a lot of money before you start understanding that this is a very complex thing. You should know this. You know this as a trader. So it was kind of like surprising that we hit the spot with just a simple like grid, and it was mainly dedication, like 24 hours to understanding that we needed to do something that was going to be profitable. But we were trading at the time with MT4, and MT4 was going through a lot of changes, and especially through FXCM. And I don't know if you know this, but they switched providers in FXCM, and we had some problems in terms of with the platform, because at the time we could hold positions and there was no like rollover, like in futures, for example. So I don't know if what I'm going to say is going to be conflicted, but I don't know if they did this to kick us out of the broker, but they switched and they changed all of this. But I'm sorry. I don't know if it's related, but it came to my mind now. So coming back to your question, I was trying to to make a point that you can make money in different periods of time just by back testing then. And now I'm just a hard believer that to make money in the FX markets, you can do it manually doing swing trading. This is for us, it's the way of living like a simple life in terms of stress as a trader, and being able to have this freedom of just checking your swing trades, holding them, and managing risk. So from that time, which I was 24/7 based and focused on that, to now, it has changed. Maybe it's my age, but I don't know exactly. But it has changed a lot.
So when I see a lot of traders, majority of people watching, the journey arc, let's say, is you get very excited in the beginning, you see a huge opportunity, and through that you get a lot of intensity, backtesting, doing all the good stuff, and usually then people get the harsh reality, which is this, as you were saying, it's not as easy as you may think at the beginning. Yep. You blow accounts, you maybe lose some profit from accounts, and then you have that low, and that is the dose of reality to then take your time and build your way up. Whereas yours is the opposite, which is you had the highs right at the beginning, yes, and the awards and the accolades and the finances. And then I had my lows too. So I was going to ask, what was that period after? Because you can also come in with, let's say, too keen, too confident, and crash and burn maybe. So what was that after the highest period like?
Well, exactly like that. I crashed and burned after that. So I think I peaked at that moment in terms of trading. I thought it was going to be, in my mind, it was like, I'll set up a hedge fund. I'll raise $100 million and, get to live a billionaire lifestyle, But it's not like that. So you get to a point where in that moment, a lot of things changed like very fast. So this switch from what I was telling you about FXCM, I had my suspicion that they were trying to kick us out because I didn't understand at that moment, but from there on, I understood how the brokers worked,
The B-book approach.
B-book, etc. So I understood that FXCM was a mega big B-book and that we were hurting their numbers because we were making money. So at that time, like I said, they made some changes. We were like, why are they doing this? They know exactly that our strategy is not going to work if they switch to this. So they kicked us out, and I had to create a broker for myself because I was big enough to be able to create a broker and manage the assets. So from that point on, I got into the brokerage side of things while managing the funds from friends and family. So that's exactly what I did.
So within the broker journey and you being involved in the other side now, what kind of things did you learn?
Oh, I learned so many things. The managing risk from the brokerage side. At that point, I was not aware exactly of the different types of books because I was a white label. Okay. So I didn't...
You didn't deal with the risk.
Yeah, exactly. I had an MT4 manager access, but it was very limited. So as long as you don't have a full license, you don't get to understand like the depth of what you can do with MT4 or CTrader or whatever the platform is. So at that point, I didn't get to access all of this information. It was later on where I was doing consulting for a client that wanted to set up a broker that I understood because I had a full license in my hands and I was able to understand everything you could do with behind the scenes with a broker. So I understood the potential of the brokerage business instantly. It took me like 3 to 4 years to understand exactly because it's something that no liquidity provider will tell you about. It's something that everyone just doesn't believe or doesn't talk about it and doesn't want to speak about how they manage their risk internally, which is something, in my opinion, it's a very complex theme because if you don't know exactly how they are managing risk, a client is not aware of the potential risk of losing their funds. So this is something that regulators need to have like a deep oversight, I believe.
The reason I asked that question specifically because I know now your approach to the markets is utilizing retail sentiment and what the behaviors are through brokerages. So I wanted to see if there was anything that you uncovered back then when you were kind of behind the curtain and seeing certain things, or more as just you've understood majority of traders fail. So it's good to incorporate that within your strategy.
Yes, absolutely. So what we found out, and over the years we've been seeing over and over the same thing, is that more than 90% of the retail trader is losing. Retail as in it's a trader that has a low deposit. So for example, it can be from $0 to $10,000. That is what most brokers consider as retail. Second, uses like big leverage. That's something that it's considered the retail trading side. Thirdly, you can see that they don't know exactly what they're doing with when they place a trade. You can see, for example, they don't place stop loss, they don't manage their risk, they're over leveraged, things like this. No, so we found out just by looking at the trading books that 90% of the people lost their money in a time span of 3 months. Just 3 months. But there were people, there were retail traders losing their money in 3 days, their full deposit, you know? So this is where we were like, okay, so we need to understand exactly what's going on and why this industry is fed with a lot of losing traders. You know, in the end, it's a zero-sum game. So there needs to be a winner, a loser for there to be a winner, and you know, the other way around. So what we did was develop a strategy exactly like what the institutional traders and the brokers trade. And this idea arrived in a moment where I was watching like all the traders like losing all their money in big moves during a period of volatility. Especially there was one period which was the Black Swan event in the Swiss franc. This was in the January 2015, I believe.
Okay.
I don't know if you remember the time, but basically Euro Swiss franc was pegged at 120. So the Swiss National Bank was defending 120, right? And it was all over the news. Like, we are defending this level, and don't worry, it will not break. And this was ongoing for, I believe, 6 months. You know, so every trader was really excited because they were like, look, this is, it's an easy trade. I buy at 120, it rebounds, and I sell at 121. It's easy money, right? So one day in January, I don't remember exactly the day, I saw live how the Swiss National Bank removed the peg at 120, and in a few seconds, the Euro Swiss franc moved from 120 to 0.80.
Wow.
In seconds. You can see this in the chart. If you look at the Euro Swiss franc, you will see it. That's the first time I saw like 90% of the clients from a broker lose their money instantly. And FXCM, that day, they went bankrupt because of this event. This was 2015.
But that would imply they're A-booking because they lost the liquidity
yes,
alongside the retailer.
Exactly. It was really funny because FXCM was a B-book trader, B-book broker. And exactly at that moment, they switched to A-book.
Oh, okay.
That's why they went bankrupt.
I was going to say, it would have been the best day of their business if everybody lost the account in a
I spoke
day.
with a lot of providers and brokers, and they were really happy because they were B-booking, obviously, and they made, I cannot tell you one specific broker that day made like 14 million USD in seconds. And it was a great experience because I didn't understand what a black swan was until then in the FX markets. And you know, it shocked me because it was the first time that I saw clients with a negative balance. So they were so over leveraged that their balance went below 100K, 50K. And it was the first time that the brokers were like, well, what should we do? They owe us money. So, and what they did was they created this new in their contracts, this new clause where they protected you against a negative balance from that point on. So a very interesting time to live. And basically I understood that, there was something we needed to do to try to reverse those percentages of losing traders. And this is our mission exactly at the academy. So this is what we're trying to do.
So when I hear these kind of stats, which is a common stat of 90% of traders lose in 90 days and so forth.
Yeah.
It's not surprising to me, although it's not the best news to hear. It's also the barrier to entry is so low that anybody can deposit within 5 minutes of opening an account. Whereas typically you want to be a doctor, you want to be a lawyer, you have to go through qualifications to then do the thing.
Yeah.
Same with, I think anything in life has this 90% lose rate of, I'm sure every kid in high school wants to be a football player, but only a small percentage makes it. So in general, this statistic of success and failure I think is ordinary. The only problem is in trading, like anybody can access it and it's damaging financially right away. But when I also see it, I try and divide it in my head at least of the professional veteran investor or trader who's been doing it for a decade plus versus the guy who started yesterday. And when you divide their behaviors, I'm sure their behaviors are very different, where this category is a lot of gamblers, a lot of over leveraging or copy signals, these kind of things. Whereas the data for the professional is probably not that bad. So when I see this pool of people, I get confused myself, because when you hear liquidity in the markets, you say, okay, stop loss hunt, manipulation, and this term liquidity. When you hear it and you think about it, you see it on the charts, makes sense. But when I dig deeper into it, the logic, it breaks for me, because if majority of these traders are trading on a B-book environment, their trades are not actually in the markets. In fact, if there was a stop loss hunt or a liquidation event, it was all B-book and it was all in a controlled environment anyway. So when you are utilizing this information of retail traders' behaviors, how are you incorporating it in a way that is effective in the charts?
That's a good question. What we do is we aggregate different providers. So we get like, for example, we are using two banks that are, well, first of all, they were FX brokers and then have like a bank license now. Okay. We have typical providers such as, platforms from Signals and things like this. So it's not, let me tell you, for example, not all the brokers are B-book. I was able to set up, because I also did consulting services for people that wanted to create, investors that wanted to create their own brokerage. And most of them were A-book because they didn't understand exactly. They just knew they just wanted to offer this service and get a commission for every trade, their clients. And in their mind, they didn't understand that the big business is in the B-book, right?
I also believe, I may be wrong, but in a regulated environment, you cannot B-book. I think it has to be offset risk, or they have to have a liquidity provider. I think B-book is more for the unregulated or the less recognized regulations, the Seychelles and so forth, if I'm not wrong.
Actually, you can. There, for example, FCA has two different types of licenses. So there's they don't call it A-book or B-book. They call it STP. So. We were talking about this the other day. So for a STP license, you get to pay, I think it's 125k pounds for the license, and obviously the paperwork. And if you want to do you want to hold risk, your deposit needs to be over 900k. Why? Because if you have a winning trader, you may have to use that deposit to pay him. So it's actually not like that. It's they call it, they use different names, but it's the same thing. It's, are you taking risk or are you passing on the risk, right? So you can, there are brokerage models which are very clear, but most of them, most brokers, what they do nowadays is they get an STP license, like an A-book license, and they STP to an offshore entity, which is B-booking, and they are the same owners, So it's kind of complex and dodgy that they use this kind of thing. They market themselves as, no, we're fair, we're transparent, we're A-booking, we're sending the trades to another provider, blah, blah, blah. And then it's their same It's the same entity with another name, and they're booking those trades. So it's how it works, but in the end, it's like I said, there are brokerages that want to just, they're intermediaries, and they just want a commission, and that's it, with no conflict of interest with the client. But I can say that more than 80% are just booking their clients. So the data, coming back to the data that we use, is based on the order books of these B-book, let's say, brokers, right? It's brokers, banks, and providers. So what we always say is that this is not like 100% accurate information, but it's a sample, like a very significant sample of what the sentiment is. It's an aggregated volume of the sentiment. So this is what we use, and to be honest, it to our students, it's giving an edge, it's a fantastic edge in terms of direction and where do they need to place the trades.
As a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come. I know brokerages, they're searching hedging models where they know that, okay, these 100 clients are buying or long on euro, these 100 clients are selling, so let's match them up. They negate each other, and then the surplus is the real risk, which then depends how they deal with it. But when you're talking about aggregating all of the data of multiple providers, there's also a lot of actions in there, because certain traders on euro may be buying for long term, maybe some are scalping, but they'll both reflect as buy positions. How do you clean the data is kind of what I'm trying to understand. When you have all this aggregated information, how do you find usefulness in there?
That's a good question. What we do is we aggregate the information from the traders, from retail traders, which are basically holding on to losing positions.
Okay. So
this includes traders, retail traders that are not implementing a stop loss, that are over leveraging. It's a cluster of the same psychological failure in trading, which is being used over and over again. So, for example, I was speaking this today with a student, and he was trying to pick a top or buy the bottom, right? And I told him, you don't have to do that exactly. I mean, you can just ride the wave and get into the trend. And he was like, yeah, but I want to, be a sniper with my entry and try to pick the top because I see a resistance here or whatever. And I was like, that's fine, but that's not where the money is made. The money is made getting into a trend and riding it, right? So this is exactly the kind of psychological, let's say, treat that retail traders use. They say, I want to do this because this is, for me, it's a good trade to be able to pick a top or buy the bottom. And it's completely the other way around. It's not doing that. It's just trying to catch a small trend or trying to catch a small wave of a certain trend in a currency. And that's it. You don't have to be a super fantastic swing trader and buying the bottom and selling the top. You just need to get a simple piece of the trend, and that's it.
Does retail sentiment and this aggregated data help with understanding more entries and kind of lower time frames, or is it more for the general direction on a higher time frame?
What we do is we use daily pivot points.
Okay.
To pinpoint our entries and our exits. So we call them when there's a cluster of, for example, we use technical analysis, which is good because Technical analysis has been criticized over many years, and I do find it useful at some points. I don't live by it like it's the Bible or the Quran, but I do use it in a technical way, and I try to find spots and cluster supports and resistance, which we call like optimum entry and exit zones, which is basically not one price. We get like a zone, and this has nothing to do with like ICP or ICT or whatever. And we try to find zones where we can enter the market and exit.
Is ICT as big as he is in the English market as in the Spanish market?
It is.
He is. Fair enough.
I don't I find it fantastic, but talking about this, I do believe that it's a spin-off of Wyckoff, right? It's more
to some extent. There is similarities.
Yeah, when I heard about it and I learned a little bit about it, I was like, I've seen this in the past, and it came to my mind a book I read about Wyckoff. Different phases, accumulation, distribution, and everything, which is fine. It's just rebranding it, I think.
To be honest, I made a video and it was kind of saying how you and somebody else, we can look at the same market, the same price, and I explain it, you explain it, he explains it in completely different ways, but it's the same price in the end, where I could say it's a distribution, ICT could say it's another thing, and another trader say, oh no, that's just a head and shoulder. I would say no, but the head is a UTAD, and it's the same thing. But kind of coming back to the point of technical, so if I'm to understand, you're utilizing retail sentiment, that maybe helps you with direction or understanding liquidity, let's say. Your technicals are rather simplistic, you're relying on zones and so forth. So what is the real driver of your strategy on the decision making?
So the real driver is we use sentiment and trend. It's basically 4 parameters we use. It's very simple. And this is something that blows many people's minds because it's so simple that sometimes it's obvious, And we've done this in the past with a few examples. For example, in pound yen, before the intervention from the Bank of Japan on reducing rates, and it was easy money because we tried to identify a big trend, strong trend. Meaning
higher time frame, daily, weekly.
Yes, what we use is basically 4 hours and daily. Okay, so we identify the trend. For example, pound yen was very easy because it's been trending upwards since the start of the year, since January 2024. And it was easy to identify. So once we get the sentiment indicator, we have this sentiment and it gives us a green or red light if we want to sell or buy, right? So once it's over 70% of the retail aggregated volume, we know it's a signal to do the complete opposite. Okay. So let's say in this particular case, pound yen was trending upwards, and 70% of the retail trading volume or traders were short, right? So it gave us like a very strong buy signal. In order to enter the market, we just used daily pivot points. So the daily pivot point give us like a fair entry price of the day. I always say it's like the fair value of the price today, based on the price and the movement and volatility and the highs and lows of previous sessions, right? So it's if you take out the daily pivot points and plot them in your trading view chart, you will see it was like really easy to enter the market because there were many sessions. I can tell you like 20 sessions where during Europe, the London Open, the price touched the daily pivot point. That was our entry, and we just needed to hold the position for the day. Okay, and this we repeated it every single day. So we added positions, managing our risk, obviously. So once we got to be in a profit, we moved our stop loss to break even. Okay,
and just kind of ride that trend.
Ride it and add volume.
Risk free, because
you
break
exactly.
even from the previous day. Okay, in that case, if you've established a good trend, I'm just trying to think out loud. So let's say it's a bullish market,
Yep.
and you're arriving to historical supply levels, just typical market structure. Retail sentiment, I imagine, because it's overextended and a supply zone, a lot of people will be looking to sell
Yep.
with that kind of resistance level. You'll be then allowing the reaction on the resistance to find a local demand to then continue on with that trend.
Exactly.
That, let's say, demand area, how are you identifying it? Is it just a very typical support level, or is there further refinements?
We just keep on watching the sentiment, the trend, and the daily pivots, and that's it.
Okay.
It's as simple as that. And once we hit like a very like significant, in this case, resistance, we do, first of all, we cut positions, or we reduce them to 50%, or we even hedge positions.
Okay.
Okay.
I was going to ask, so you can use your daily pivots to kind of enter and follow the trend.
Yep.
How do you decide when it's time to exit?
That's a good question. We use simple technical analysis, for example, trend lines, things like this. In GJ, in pound yen, it was really easy to spot like a switch in the trend. I mean, I can show you in a chart. It's we just plotted like the basic trend line. It hit like a very significant weekly resistance, and we knew that we had to sell or just hedge our positions. So in any case, we were able to ride the trend for, I can say, 1,000 pips. So it didn't really, I mean, I could have made 300 pips more, but I decided to wait and hold it, right? Until I saw like a clear break of a trend line or a support zone to exit the market. So we don't try to catch like a big trend. We're fine with just catching a small portion of that trend. So that's basically what we try to achieve.
With regards to kind of your four main reasons to get in,
Yeah.
are you involving also fundamental analysis, kind of to know the macro, know the overall direction?
To be honest, we are aware of the fundamental analysis, but we don't use it. We don't need to. We just use price action.
Okay.
I mean, obviously, for example, the yen. We all know that the Bank of Japan is an active player in the FX market, and we are aware. That's why we use stop loss and try to tighten as much as possible if we're trading yen. No, so we understand that fundamental analysis is a big important part, especially with the yen and other pairs, but we don't use it in the decision making of entering the markets and exiting.
Okay. With your journey being 15 years around, I guess,
Yep.
there's a lot of things that have changed from the typical prop firm, the real prop firm, let's say you were involved with, into the brokerage space, and then algorithmic trading, and now the way that you are. Obviously, a lot has changed, but and the rise of now, let's call it simulated prop firms, is kind of the new wave where everybody's attention is and money is going towards. How are you viewing that opportunity for new traders?
I think it's a fantastic opportunity in my personal experience and opinion, because I was speaking with Ivan, the co-founder, and we were arguing that we didn't have the opportunity to get access to capital this easy, right? So we always tell our students, look, you don't know how lucky you are. I was battling to get capital and to get funds from family and friends, which I thank them a lot for the opportunity, but it was a complete nightmare for us. And now the access to capital, even though if it's even if the challenges are a demo account, you can get access easily to a lot of funds. So as an example, our students right now, they're managing altogether, I think it's 35 million euros in just over 2 years, right? And every single month we are adding capital allocation from different prop firms, and it's around 2 million which we are allocating to all of them, right? So and many of them are, obviously it's a process, but many of them are making some, extra money every single month just by trading with us, our strategies, and just by getting capital allocated. This 15 years ago was impossible to get this access. So I do believe it's something like it's a great opportunity to get into trading nowadays.
For sure. And if I compare it to if I had to kind of raise capital from my parents and friends, there'll be so much pressure on that to not mess it up. Whereas at least with the prop firms, you have the luxury of a reset button and a small fee to try again.
Exactly.
Which I think is also a great way to learn, where you learn with small failures. And I think in trading, failure is guaranteed, but at least you don't fall from the mountain and you've got to really start from the bottom. But you have small setbacks which you can really easily come back from.
Completely agree.
Now, the question I kind of want to ask is, in the journey that you've had, you've kind of seen the misaligned incentives or objectives with the retailer and the brokerage booking, and they kind of rely on the downfall of the trader to profit. Although I am in agreement prop firms is the best way to trade and it's such a great opportunity, that maybe portion of the problem still exists, where we know how the simulated prop firms are essentially a B-book model, and they are relying on people to fail the evaluations to and then minimal payouts, and that differential is their profit margin. Do you see any concerns there? Because right now a lot of prop firms are falling and a lot of prop firms are changing, and in an immature market, a new market, is kind of normal to have these kind of bad actors and finding the footing. But overall, what is your assessment comparing it to the brokerage space?
That's a really good question. I believe that it should be, let's say that the conditions should be more fair. Now, we get a lot of limitations in terms of, with the funded accounts, in terms of you cannot surpass this drawdown, you need to make 4%, and then there's another step 2, like another challenge. I believe there are asset managers which understand that they don't need to put that pressure on the trader, because when you buy a challenge, you have the pressure of delivering what the prop firm wants from you exactly. So, limiting like drawdowns. I mean, there has to be a limit, but not like a 4%. You have to be more light in terms of objectives for the trader to be able to deliver. And you cannot see a full potential if you're limiting many traders with different phases of challenges. So I do believe that a model it's gonna be a breakthrough in the prop firms is instant funding, for example, or just there's a company it's a Spanish company. I don't want to say the name, but it's a big asset manager. And they have this model where there are no specific limitations. You just need to show them a track record of success, and they will evaluate internally if they allocate capital, which I do believe it's interesting. I do believe it's a fair model, because they have a lot of investors behind them. And it's not easy to find a good trader. Yep. So the most valuable thing for them is someone that's delivering and managing the risk for their investors as much as possible. And I do believe that model should be the one implemented in the near future, because it's kind of complex, the limitations that I'm seeing in the prop trading farms. Yeah. From the founders of prop firms that I know, a lot of them are investing a lot of money just to solve this problem of how can you find utility in the data, because they have an abundance of data. They have hundreds of thousands of traders and their daily activity. And from an investor's perspective, it's like, if you can find me some anomalies, some great traders, and put in parameters where you know what's abnormal behavior. I think a big issue right now is that because it is fictitious funds, somebody can be trading great in the evaluation. And the moment it's funded, this pressure of like, I can make money now, the behavior can change. Yes. Moreover, because they know it's not their money, they might be trading great for a month, and then one day just they feel emotional and they just max lot size and see what happens, because they know it's not their money. So it does become hard for the prop firm providers to find use in the data, but I know they are trying, because as you said, I think it'll be the next revolution in the space and actually create longevity in the industry. Yeah. On that word longevity and kind of future in the industry, where do you see the industry going, and what kind of hand do you want to have in it? Well, I decided a long time ago that I wanted to I always say that I try to be the Robin Hood of the trading, because I want to make the losing traders, make them successful. you know, because I've seen so many traders fail over and over again. And especially the reputation that the industry gets when someone loses their money, which is their responsibility. But when someone loses their money in a few days, they directly, I've seen this in the past, they say, this is a scam. This is a market, it's a scam. And basically, they're not taking responsibility for their actions. And secondly, they are not educated. And thirdly, they think that it's an easy business, which is not. So, my idea of my future, I've been thanked by many people and saying, "Look, you've changed my life." And I was like, "What? I've never heard this." That quote just changed my opinion and way of looking into my future. So, my ideal, let's say, target in the near future would be to transform the industry of the retail trading and be able to make profitable retail traders, which I know it's going to be very complicated because I'm going to have a lot of hate from brokers because I'm going to do something they don't want to. But I believe that I can be able to deliver this and make people with no education be able to make I'm not going to say a living, but maybe some extra cash by trading.
For the new traders that may onboard with you from Spain and around, what would be the key piece of advice you would give for not necessarily technicals or strategy, more like how to approach the journey and what kind of expectations to have?
Good question. Many people just think that it's getting on board, being educated 1 year and trading and training with a demo account, then with a real account, and they will make it. It's not that way. It's like every single business. You need to go through a process. You need to be on top, be down below. You need to especially tap like rock bottom many times to understand that it's not an easy business and that one simple mistake can be devastating for your trading account. One simple mistake, no? So I've seen this in the past. You were mentioning that many traders believe that, okay, I'm doing it well with some prop firms funds, and then all of a sudden they go full leverage and they just fuck up everything. First of all, have patience, believe in the process. Everyone has a different timing in terms of process. I always say I was not successful until 10 years of trading. Even though I was successful at making money, I was not at managing risk, for example, or at the psychology behind it. So I would say get educated properly, go through the process, and have patience, and don't you ever forget that this is a business, right? It's not making easy money and fast money, which is sometimes it's a misconception that we see on social media, you know. And yeah, basically that. Just trust in yourself and be patient. This is something that I say to my students. Also, the less you trade, less is more. The less you trade, the better. Be selective with the trades and stick to one pair or two if you're trading FX. Don't try to... also, don't over leverage, obviously, which is something that we always say. Yeah, and that would be it. That would be it.
To kind of wrap up the episode, I just want to end with the opportunity for yourself to let the audience know where they can find you, especially the Spanish-speaking audience.
Yeah, absolutely. They can find us at Black Sheep Academy. My personal profile is Cesk Trades, at Cesk Trade, which is CESK Trades. And yes, and we are developing for this year a English-speaking partnership, and we're trying to create Black Sheep Academy in English. So hopefully 2025 we will be around here with you.
Black Sheep, I love the name too.
Yeah.
Be different.
Yeah, exactly. We're the Black Sheeps.
There we go. Thank you very much for your time. From all the way from Spain to be here and do this podcast, and I'm sure there's a lot of value for people to take advantage of. Thank you very much, man.
Thank you very much, Waqar.
There we go. Thank you. Good stuff, my man.